Finding the right mentor is crucial when it comes to trading in this market. A mentor is one that has a carefully crafted plan and that shows you the before and the after of each concept that they provide. A mentor has to be someone that is unbiased and is willing to accept change when the market dynamic changes as well. So in today's market recap, we're going to be explaining about how my mentorship program is different than anyone else. I provide education, focus on one-on-one coaching in my program, and also provide a carefully crafted plan each and every day, each and every week to ensure that my members are set up for success. So let's get into it and let's talk about what happened today. Let's go over the trades that we took and let's go over key plans on what we believe is going to be happening, because this week it's the FOMC interest rate announcement. So let's go straight into it. So today in the S&P 500, as always, we start off with our gamma report. Now our gamma report is our key to our success. Okay, in this gamma report we share the key details that everyone needs to know about. We show the before and the after, highlighting our key success, because in order for our measurement to be confirmed, we have to show the before and the after, because having this progress details also believes trust in the model itself. Okay, this STX model has been carefully crafted, and we always want to make sure that the transparency is there no matter what it is. So in today's details, we start off by giving the details behind the market. We explained that the small caps was stronger and the Dow stocks were up. We also suggested that there was weakness in the crypto market. Also, we mentioned that based on the call gamma in our report, that the market would range between 56.10 and 56.40. That's where most of the probability we assumed it to be in today's trading session. We also mentioned that if SPX remains under 56.40, this is S&P 500, that we're looking to constantly see a lot of rug pull, and that's basically a lot of selling pressure inside the market, and that's exactly what we've seen over here. So this here is exactly about what happened in the S&P 500, as you see. The put gamma here is basically expecting what kind of weakness should we see. We mentioned that the market is bearish if it gets under 5600, 5610 level. It didn't get under 5600, but was under 5610 very briefly. This was a point in time in which the S&P 500 went at 5600. Okay, the neutral gamma, that's basically when the call is in no man's land, is between 5620 and 5630, and that's where majority of the movement was lying for the market. We mentioned market is bullish at 5640 and market is bearish under 5600. Okay, and we'll go over the news as well. We talk about that briefly, because the news is also very important. Whenever there's a news breaking out, the news will assist you in understanding what are the direct details, what are the direct news that can impact the stock, and the indirect, because today we have a perfect trade that we spoke about on how one of the indirect news impacted one of our plays and that we did very well on. Okay, so we gave our STX levels. As you guys can see, the first inflection point was 5643 and the level 1 bearish was 5600. So nothing really hit, and that's another reason why we knew it was a chop market. Based on our post report, we had confirmed that the market definitely was trading within our range that we mentioned, 5610, 5640. So we knew it was chop all day, and our strategy heading in today was pretty much get those entries, take your profits, and find the next setup. Okay, we didn't want to swing in today because this week we do have the FOMC interest rate announcement. Based on our detail here, we rated ourselves as an A+ because we confirmed it was a choppy market. It wouldn't hold. We confirmed the ranges, and we had the perfect strategy in trading this market. So we're going to be talking about our trades that we did today. Okay, so the first trade that we decided to do was purely based on the news here. Okay, so the news that I'm talking about is that Apple was down 2.3% after initial iPhone phone demand appear lower, which was confirmed by Jeffries and Citi. Okay, the play that we had in mind for this was ARM, and the reason why ARM was a perfect play for this is because, if you guys can recall, the reason why ARM ran up in the first place had to do with the fact that Apple iPhone was using their chips. Okay, so if Apple is using ARM chips for their new iPhone, and the new iPhone is expected to have lower demand, this is why ARM Holdings was the weakest semiconductor to date. And this was our top play that we were looking at to short. Because of our success, we had our levels already strategized. We knew that we needed to short at open, so we shorted around the open. It was pretty weak, and it went to our level 1 bearish inflection point. We got out at the perfect timing at near the high today premium. So as you guys can see, we got in right near the open at 936. It started to drop right off that point, and we sold it around our 138. It actually had a low day around 136, but we knew that this was a tough spot for it to hold. But we sold it off. We were off by around 50 cents from the high of the day premium, and we definitely banked around 50% on this play here as well. Okay, we also wanted to buy Microsoft 435 calls, but the thing about Microsoft was that it had an event this today on their Copilot. This trade did not, it failed because this 435 call was actually going for around $4. It went as low as $2.50 from a fill, and it just never went to a fill. And we're okay with that because we do not want to buy something that's moving at a high valuation. So we avoided that trade. We sold our inputs for 50%, and we got into Meta. Okay, so Meta, this was a perfect setup because we analyzed the premiums on this as one that looks like it was about to explode. So we got into this. We noticed that the stock was looking pretty bullish here, and you know, with the market moving higher, out of all the big techs, this was definitely the one to go. We got in around 526, so we got it here when it was at the high of the day. We noticed that the premiums were moving a lot faster than the stock itself. Okay, so when you notice that, you know, that was a perfect idea along with the chart that it will definitely explode. You know, in terms of the premiums in my mentorship program, I show the proof of the concept here. So we got in at the Meta Meta calls at 1 o'clock, and we sold it at 2 o'clock, banking around 65%. And our strategy was for today is not really swing any much plays, so we didn't want to do that. However, we did swing our Nvidia plays, and the reason for that is because Nvidia was trailing at our level 1 bearish. Okay, so our level 1 bearish is a decent support. It's like a gatekeeping level. So the theory behind this is that if Nvidia hits our level 1 bearish here, and it looks like it's a possible turnaround where it can get to 124, the premiums on this was actually at the low of the day price. So we decided to take this play here in anticipation that it can possibly hit 124. And we told the team that if you were to buy this as a potential swing, because it went from 1, which was a high day premium, to 0.5, it's a possibility that could go to 2.5. So from 50 cents to 2.5, that's a 400% return. And this type of swing, you want to size it light because the potential size that you can earn on this Nvidia play is going to be crucial. And you have a lot of catalysts, and the catalysts include the FOMC interest rate announcement. The second catalyst includes the ARM event, which is happening on Thursday. We mentioned that in our Twitter feed. So based on that details, being involved in my mentorship program involves you being 10 steps ahead of the market. We plan everything ahead of the time. You see all our inflection points. You see me making daily YouTube videos all the time, showcasing my mentorship videos and showing how we predicted the tops or the bottoms. I believe this is a strong support for Nvidia to hold. You can kind of see that over here. And part of the reason why we like the calls is that Nvidia had a low of the day at 114, but the funny thing here is that the premium was actually at the low of the day price when the stock was at 116. Okay, that gave me a feeling that Okay, this was a very cheap option contract, so cheap that the market was even pricing it in properly. And Intel also had bullish news that we were looking at. I did mention it briefly in the room that Intel could surge based on our details on being the most active list. So it was on the most active list. We said this before, open, and the news on Intel is that they had basically a partnership signed with the government, and we also, there's two pieces of news that happened. One in the morning, basically Intel after the stock qualified for $3.5 billion government grants, and then they got another deal with the government that allows them to produce chips for the military. So that is one stock that is definitely exploding off that news. So we hope you guys enjoyed this content here. We'll see you guys in the next one, and like always, let's get the money.